The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome to The Trade. Joining us today to give us some ideas potentially for the next bull market, Gary Glover from Novice Capital. Gary, a very warm welcome as always. So what is the sort of basis for this conversation today? Do you reckon that we've hit the bottom and that we will be moving up from here?
Yeah, it's funny. I mean, the 50 years of the decade and also the post-election year cycle. So normally sort of a mid-March or an early April low is the sort of bottom of the cycle pushing up here. So that's the normal sort of cycle there. So we want sort of to see some proof of that in the charts there. So I thought it was really interesting on the weekend there. I went through maybe the ASX 300. I probably saw 30 or 40 stocks all come back and retest their previous lows and put in what they call like a marginal new low. So it seemed like 30, 40 stocks in the 300 there making false breaks, coming back to really deep old lows and just breaking them by like a few cents. So not going 1 or 2% lower, but only going a couple of cents lower and then reversing here, bit of volume as well. And we're seeing the market have a pretty strong bounce out of that low. So when we do have lows in the market, like the index, you normally see a really fast bounce back to the midpoint. So if you look at all the deep lows in the historically speaking, you'll see a really fast move back to the midpoint. So if you just say it drops 2,000 points, it'll bounce 1,000 points really quickly, and then it might settle back and make a high low, or sometimes they can continue higher like the COVID low, but most of them like normally consolidate and build.
Got it. So we are watching the XJO in general with much interest, but I would have to think that there would be some companies out there that you would see at buying levels right now. What would they be?
Yeah, I mean, we saw like out of the majors there, we saw like CSL's come back to $230, which has come back on the weekly range. If you think about, if you go back and look at the 40s and the 70s, which were other periods where inflation was a little higher, we saw great volatility in markets, and we saw range-bound markets there where, and some of the ranges were quite large. If you go back and look at these historically, you're seeing like 40% moves and 70%, so 70% rallies and 40% declines. Just saw some really big moves in those periods there. But we've seen that in the last few years there. We're seeing a lot of sort of stocks stay in these big ranges there, go back and retest highs, go back and retest the old lows and make what they call these marginal breaks. So go marginally higher or marginally lower. And these are often points where you get a reversal and change in trend. So it's important when you go back and retest those old lows is that you don't break them and keep going. If you get a marginal new low, I mean, talking just the smallest break and then a reversal, that is normally a good sign. So often where you can get a reversal and a fast move in the opposite direction. We've seen a lot of that in the previous years, but on the weekend there, I must have saw at least 40 stocks, and I thought I better go back and look. Maybe there's some more there. And as I started to go back, I started to see more and more. And I thought, I can't keep going. I've already spent a couple of hours. But there were so many stocks that have come back to retest some really deep old lows there and reverse, and some good volume as well. So we saw pretty good capitulation volume into that 7th of April low. And just some awesome signs here that I sort of see. So I think maybe a lot of people might underestimate the importance of this low. This low might be as important as, say, the October 22 low, or maybe the October 23, like a year later, that came back and made a deep low as well. So I think most people might think, oh, we're just going to see something tempered here, or maybe more ahead here on the negativity side here. But the charts actually are telling us something a little bit different there. So seeing some really good, like when you see a market bounce so fast, that's sort of like, it's like pushing a ball underwater and then it bouncing back here. That's sort of like, we see that on the stock, that's normally a sign of strength. So we're seeing that in the markets here, particularly our market. So seeing signs of strength around the place there. So Yeah, I mean, CSL, I think, CCP, there was just so many stocks that made false breaks there. So there are a few setups that I look for when I think we are low in place there. And I like to see false breaks. I like to see what we call like a base building here, where you see like one or two, or like a 0, 1, 2, 3 pattern, which is a series of higher lows after the lows. So you're seeing 3 higher lows sort of set up here. So we are seeing some of those already. So just seeing some really good signs across the board.
Yeah, okay, so that's CSL. Macquarie is another one that comes to mind that, really did hit a low, but seems to be, recovering. Is the bottom in for Macquarie?
Yeah, I was lucky enough to buy some Macquarie and some net wealth, into that really aggressive sort of sell-off there. So just think those sort of market proxies are often they get beat up as they're high delta, high growth, but if you think your bounce is going to come here, they're the ones that really bounce pretty high here. So I think they look pretty good here. Look, they've had a good bounce here. Look, maybe they're probably due for some consolidation there, but the strength of this move so far is showing, is a good sign of strength. So I think those market proxy stocks have been pretty firm. I mean, even ASX has actually moved to a new high here recently. So yeah, there's signs of strength in those sector there. So that's pretty healthy as well. The only thing I'd be aware of there, Nadine, is probably some of the defensives. I think we've seen in the last month there that the defensives have held up pretty well. So like your Coles and Woolies, maybe CBAs. So those are the ones that I probably wouldn't be chasing here. I don't think they're oftentimes you see when the market goes through a pretty negative period, you'll see the defensives hold up. But then once the market sort of gets more confidence, it'll come out of defensives and go into growth here. So it could be a bit of a trap here to be too defensive here. Might want to open the shoulders here and take a bit more risk on board. I think the market looks more positive than most people are giving it credit for.
Well, you mentioned growth. One company that's come under a lot of pressure as of late is NextDC. Now, there are fundamental reasons for that, but just, at the very basic level, it's a growth stock leveraged to, AI. So when you look at the charts, what are the charts telling us?
So you've got Macquarie Technology, I think you've got DGT, which is a recent REIT in that data center space, Goodman Group. There's so many of those data center stocks have been pulverized. They've probably all dropped around 50%. I mean, DGT, which is a REIT IPO, is halved. So that's a REIT, which is halved in only about 5 months. Look, maybe there was a bit of overvaluedness in those sort of data centers. And I think, with Microsoft closing down its sort of demand in that sort of space there and saying that maybe they don't need as much there has caused the sector to have a really big retracement there. So just feels it might be a little bit overdone, even though the valuations were pretty high. I do know that the energy companies are forecasting 3 to 4 times more power energy required from data centers in the next 3 to 4 years. So their forecast, they're planning for a lot more energy requirements in that area here. So I just feel like maybe that sell down might be a little bit overdone, but I do like to sort of see the stocks sort of show signs of a low and then start to build a bit of a base there. So I think MAQ's made a false break, come back and retested that old low from about 3 years ago. And again, just gone a couple cents lower and reversed. NextDC started to make, 3 sort of higher lows there just on the daily. So a little quicker than normal. Normally the basing patterns take longer to build, but we are sort of seeing, with this volatility there, we're seeing, retest come back and then another higher low and retest. So that volatility should start to contract. And we start to see a series of higher lows, and we're seeing those on quite a few names. I think NextDC's sort of broken a swing high today, so that's another good sign here. So I'm just seeing more positivity there, Nadine. So look, I know it's early days here, but just starting to see some signs of positive shoots there coming through on some of those growth names. But that's been a pretty wicked decline. Those data centers just might be. Market's got a history of overreacting here. I mean, talk about the tariffs there, Y2K, just so many issues there that we tend to overreact here in the market pretty quickly. Sort of panic first, ask questions second. So yeah, I think it might be a bit overdone here. So definitely some stocks in that area there starting to look pretty interesting.
Y2K, boy, that takes me back. Haven't heard that thrown around in quite some time. I know you brought a daily for Sonic.
Every company in the ASX was required to update the market on what they were doing to combat Y2K.
Yeah.
That's how wrong the market, can get it. So, we do see a lot of mistruths and a lot of, I guess movements in the wrong direction all the time. So the market does get it wrong occasionally. So, but it can overreact and then it can recover here. So just one area there, I think that those data centers there, it could be an overreaction here to what's occurred here. It could be a really good opportunity.
Great. You brought a daily for Sonic. What's it telling us?
Yeah, Sonic's interesting because it's on the weekly chart there. What you won't see on the daily there is the weekly support. So if you look at the last sort of couple of major lows there, draw a trend line through it, we've sort of come back to that level around the 24.40. But on the daily chart, what we are seeing is a contraction in the price. So what's referred to as a VCP sort of pattern, like a volatility contraction. What that means is each pullback is getting smaller and smaller and smaller. So just tightening up. Because we've been a bit volatile here, had a big pullback and then the first bounce. The second one gets sort of narrower and the third one narrower, and then we start to break up here. So we've seen 3 contractions and then a positive break here in the last couple of days here. So that's normally, what I'd like to sort of see. So false breaks, sort of 3 higher lows, all these contraction in price and then breaking up. Those are sort of things that we want to see to prove that we've got some sort of low in place and potential avenue to break up here. So just some good signs there, sort of those technical patterns which I like to see at lows, but they do need to prove themselves, and we are seeing a few of them prove themselves here and starting to break up. So that's a good sign.
Well, look, I'm going to leave it on that positive note. I think, Gary, it's been a pleasure having you join us today. Thank you.
Thanks, Nadine.
The trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.